Hello, good evening, and welcome everyone. Okay, let's start in next 3 minutes. That is 20 minutes after 9. All right, so we are starting right away. Uh, let my presentation come up. Okay. Okay. All right. So, yes, Mr. Sampson, you're welcome, Mr. Sampson. Hope you can hear me. Can you type clear? Let me confirm. Give me 111 if you can hear me very clear. Give me 111 if you can hear me very clear. If you can hear me very clear, give me 111. Okay, so we are starting right away. So tonight we'll be talking about mastering the basics of crypto trading. There are things um, you need to get familiar with. The things you see in crypto trading, trading crypto. There are some things you need to be aware of. You need to master before you can be able to trade. So these are the things we're talking about tonight. And so we're going to follow our slide. So let's move to the second one. All right. Hold on, please. All right. So okay. So this is the first one is key terms. So we're going to explain these three things here, which is leverage, margin, and PNL. So these are the things you need to be aware. You need to know. You need to know them because they are the things you um, you see in your trading, right? So I would like to zoom this very well. Though the write-up is very tiny, but I believe some zooming it. Miss Favor, you're welcome. Mr. Samson, you're welcome. All right. So one is leverage. The number one is leverage. Now, what is leverage? Now, leverage allows traders to control larger positions with a smaller amount of capital, amplifying potential gains and risk. Now, leverage is the only thing that can make someone that has $5, $2 to open a trade in the market. Imagine somebody with $5, $10 opening a trade in Bitcoin, BTC, that is around 100,000 plus in dollars, not in naira. Now, what gave you that opportunity is the power of leverage. You understand? Now, the broker is giving you an access to open more positions by giving you extra money at the back end, not the money you can withdraw. At the back end, that is where it's happening. So they give you extra money to add to what you have already in order for you to trade. Now look at the two things that are involved. If you are going to make a gain, you will make gain, a good profit. But if you are going to lose, you are probably going to lose the whole of your money. You understand? You're probably going to lose the whole of your capital. Why? Because the leverage has a potential for you to lose or to lose money, and also for you to make profit. You understand? So these are the things that are involved in the margins. In the leverage, right? So the leverage gives you room to take more positions in the market. Okay, so let's move to the next one. The next one is the margin, right? Okay, so the margin is the collateral required to leverage position, determining the trader's buying power in the market. Now, one of our member was asking me because in the youth trading, you will see that where the boat is holding some amount of dollars from your balance, right? So the boat is holding it because that is the amount you use to open position. You understand? So that is the collateral, the margin. All right. So that is the margin. The boat is using that particular one to trade for you. Sorry, that is the amount of money you use to open the position that is running. You understand? So that is that for margin. Now let's talk about the last one here. We have PNL, which is profit and loss. So this represents the financial outcome of trades, essential for assessing performance and adjusting strategies. Now, if you are in loss, in the PNL, that is where you will see the amount you are losing. If you are in profit, that is where you see the amount you are earning, you are gaining from the market. Right? Alright, so having explained leverage, margin, and PNL, so let's move to the next slide. So in this slide, you're going to understand understanding 1 to 2% or ratio, 1 to 2% or ratio rule. Now, what does this mean? This simply means that you want to open a trade, you want to place a trade in the market, and you, out of your $100, you want to risk $10. Out of your $100, you want to risk $10 or $5. Now, how much are you risking? Let's say you are risking $5. And if the trade goes against you, you are going to lose $5. Now, the rule of 1 to 2% means that you are risking $5 to make $10. That is the rule of 1 to 2. You are risking $5. So for a profitable trade, for you to make or have a profitable trade, you are expected to risk $5, and if the trade goes against you, you are going to lose $5. But if the trade goes to your favor, you are going to gain $10. You understand? You are going to earn $10. So that is the rule. So let's read what you have here. So the 1 to 2 rules is essential for effective risk management in crypto trading by only risking 1 to 2% of your capital on a single trade. You ensure that you can withstand loss and continue trading without significant financial strain. So you are expected to risk at least 1 to 2% your capital, right? So you're expected to risk at least 1 to 2%. Let's say you have $10, sorry, you have $100 in a trade. You're expected to risk what? 1 or 2%, right? So I was actually explaining the 1 to 2 ratio. So this is what this particular one is explaining. So let's move to the next slide. So we'll talk about that. So let's talk about the stop loss and take profit strategy. Now, I think this is where that one comes in. So let's take okay, the key strategy for effective trading decision. Now, one is stop loss. Stop loss, set a stop loss to limit potential losses. That is the key strategy. You need to set a stop loss. Now, what does a stop loss? Sorry for that. I think it's a pause. All right, so sorry for that. Uh, okay, okay. So what does a stop loss? So I think I've really skipped where we are. Okay, so this is the slide we are in. Okay, so helps you. Let's say, for example, you have done your analysis and you want to enter the market. So you want and you want to risk 1% of your capital. Now the stop loss is what helps you to risk that 1%. Without you setting stop loss, you are definitely going to lose, if not the whole of your money, more than 1%. You understand? So the stop loss makes you to keep that, to limit the loss, the loss you have if the trade goes against you. You understand? So you also determine take profit levels to secure gains. You understand? So the third one is adjust levels based on market volatility. Now, let's say, for example, we're going to do more of practical with the paid group, with the paid class. So this is just a general teaching. So we're going to do more of practical, and everyone in the paid group will be able to get more insight of what we are teaching here, right? So adjust levels based on market volatility. Let's say, for example, you are in a trade. Hmm? You are in a trade and you are risking like $10, and already you are watching the trade and you are seeing that the market is moving against you and there is volatility in the market at that very point. So what will you do? You just need to adjust. You just why? You can, at that moment you don't need to risk all, because if you leave the market, the if you leave your stop loss, is definitely going to take you out. So you just need to adjust, right? So let's talk about the last one: regular review and update your orders. Now let's take, for example, you you are in a trade. There are different types of trader. We're going to talk about that maybe in our next class. Now you are in a trade, you are like a swing trader. A swing trader, you have a trade that is running, and you just need to keep checking your orders, whether if you place a limit order or you have a running trade. You just need to keep reviewing, checking your trade, right? So it's very important. So under this, we have essential best practice for success. Stick to your trading plan consistently. Stick to your trading plan. So this is going to be exclusive class with the paid members, right? So you need to stick to your trading plan. For you to trade profitably, you must have a trading plan. You use risk management techniques wisely. Use risk management. It is very important in your trading. You apply risk management. The number four, avoid emotional decisions while trading. Sometimes you might place a trade and you lost that trade, and you are seeing another position with the same setup you used to trade. The only best thing for you is, if you cannot take that trade, just go and sleep rather than trading with emotion. If you don't want to trade that setup, yes, it's your setup, just leave it and go and sleep. Don't put on a trade, don't execute a trade and be and like being emotional. on the trade. If the trade does any movement, you you end this thing, or you start moving stop loss anyhow. You understand? So we'll do more of practical with the paid class as well, because that is exclusive class. You understand? So that is continuous learn and adapt to market changes, because most of the times, many a times your strategy will not work. Many a times your strategy, you are set well you. In fact, it can fail you consistently. You understand? So you just need to adapt at that very moment. You just need to stay away. You understand? You just need to stay away from the market, right? So that is it. So let's move to the next slide, the fifth one. Okay, understanding technical analysis, key indicators for success. So you need to understand technical analysis, because this is one of the major things that helps you in your success of trading. Technical analysis. If you can analyze the chart and have a good prediction, let me use that word, of the market movement, you will be coming out with profit. You understand? Because majorly what moves the market, what moves the market is the what's it called? Is the fundamental. That is the major thing that moves, because it market responds to buying and selling, right? But your technical analysis has a lot of roles to play. You understand? Because market repeats itself. Market is alive. That is one thing you should understand. The market you're seeing is alive. It breathes like human beings. So because of that, any attitude you see in the market today, or behavior or movement, you can still see it either tomorrow or next, because market is like a human being. It breathes. You understand? So understanding the technical analysis involves analyzing historical price movement is very important, because the history repeats. History. That is why you can see a movement today, you mark that movement, tomorrow you can see that movement and it will do the same. Though it doesn't do the same all the time, but history repeats itself. So you have to know the right knowledge, they have the right knowledge to analyze the market. And this is one of the major things we want to give to our mentees, to our those that are under our mentorship, right? Mr. Bayemi, you're welcome. You can see your chart. All right, so let's proceed. Okay, so historical price movement and initiative and utilizing indicators such as RSI, MACD. So these are indicators that tells you when there is volatility, like this RSI tells you when there is volatility. You understand? So we're going to talk more of that when we go into indicators, and we're going to add and set up the indicators in your trading view, right? So, and moving average to predict future trends and make informed trading decisions. All right, so let's move to the next slide. So let's take this. So So the key takeaways for success emphasize on importance of practical risk management and life learning in crypto trading. Now, one is what? Practice. Practice. So everything we are going to be teaching, you need to make sure that you go, especially when we start the practical class, because now it's more of teaching so that you have the right knowledge. You understand? So when we start the practical, you are expected to go and do same. You understand? And come back for the next class for a proper understanding. Consistent practice shows your trading skills. The next one is, as you're practicing, you are going to risk management. You understand? So once once we start our class, we are going to start first with a demo account in Bybit. We're going to start first with demo account, then from demo account you will do your practice. After analyzing the results based on what you are being taught, then you'll be able to practice in your demo account. And another one is to keep learning. Keep learning. Our mentorship is live mentorship. You are not joining today and in 3 months you'll be removed. No. So you are going to keep learning as you are trading. If you're having any difficulties, you have access to our mentorship. You understand? So, and if you are on this call, you have not joined our mentorship, it is an opportunity for you. Our mentorship costs just $30. Just $30. Why? Because we understand the state of the economy, and we are dedicated to empowering individuals that wants to thrive in this digital economy, make money with your smartphone and with internet connection. So you have interest in learning on how to trade profitably, is an opportunity for you to join the team that cares, team that that is dedicated in imparting the right knowledge to the community. So you can send message on the chat box if you are just joining us for the first time and you want to join our mentorship. So you can send message on the chat box. So this is the end of tonight's class. Let me just take 1 minute to let me just take 1 minute to go to trading view. So let's do something. So in our next class, we'll be walking all our paid members through trading view. We'll be walking them through, because I realized that most of them, they have Bybit verified already. So because of that, I'll have to start taking them on the class that they need to get now. Then I'll be doing other videos for newbies that are joining us as they are coming in. They'll be taking the videos by series, but I can start working with them so that they will start doing their demo practice at the moment. All right, so this is XPX. So look at what here. I was not on the chat when this happened, but I put this evening. I put these trend lines. Why? because I know what market could do. So if that I was online when this happened, I would have taken this trade. Why? Because I know that at this point it's going to break upward. I don't know if anyone from the paid group is online with us. I sent something on the paid group. I sent something on the paid group. So let me get that now. I said, so this is what I sent on the page group. So now if you look at this chart, can you look at this chart very well? You see that this is exactly what happened in this XPX. And what happened, it broke the trend line upward, right? So that is exactly what you have here. Look at it. Did you see? So when you have access to materials, you'll be able to know what happens in the market. Now, what am I expecting in this market? Let me show you. I expect this price to come here, touch this trend line, and move up. This is what I'm expecting. This is what I'm expecting in this market. I expect it to come touch this trend line. Why? Because this is, let me put it in 1 hour. Okay, so this is 1 hour trend line, though there is a fake out here, but I expect this. There is a fake out at this point. I do not have my pen, screen pen. So I expect it to touch this trend line. I expect it to touch this trend line before pushing up. You understand? Already there is an engulfing. It has, on 1 hour, it has engulfed this. It has taken out. I think I need to put my pen. All right, so I've gotten what I'm looking for. So now if you look at here, it has taken out this. It has taken out this. So, and it has closed above this as well. So what I'm expecting is a pullback and it will go up. So that is what I'm expecting in the market. So if you join our mentorship, you're going to have access, not just that, you're going to have access to materials, PDFs you can read, and other things that you need for your success in the trading space. So if you're on this call, you have not joined our mentorship and you are interested, can you type I'm interested on the chat box? We're ending the call right away. If you are on this call, you want to join our mentorship, it costs just $30. Indicate in the chat box. Indicate in the chat box. Indicate in the chat box. So sorry, the link we were using before, I forgot to change it. That is why so many people were having challenges in joining us. Okay, so we are ending the call. Thank you for joining tonight's meeting. Let me get those that are on call. If you are on this call, please can you type 111? Let me know those with me that are with me. Okay, Mr. Sampson, good evening. Thank you for joining. Thank you for joining. Okay, who else again? Oh, Miss Obeyemi, you're welcome. Good evening, you're welcome. Thank you for joining. So, our mentorship class is ongoing. So this video will be available for everyone to access. General class, we're supposed to have our normal meeting, but I was really choked with time, so I couldn't have hold the meeting earlier. So I decided to make it a general class. So every other updates will be shared in our groups. All right. So thank you for joining, and we'll meet by Saturday. Thank you, and have a wonderful night rest.